Yeah, what a wonderful day, huh? Yeah. Hey, yeah, when Ryan pinged me at 4 o'clock in the morning, thank you, Ryan. It was 23 degrees Celsius. Thank you, Ryan. He's like, yeah, I reset my password. It was great. Thank you. Yeah, so I was outside actually, outside, 4 o'clock in the morning, hanging out, enjoying the nice weather. So, hey, without further ado, what is it? It is Thursday. Wow, is it really Thursday? Thursday, March 30th, 2017. This is your daily Forex trading strategy session. Feels like a good day, doesn't it? How do you start all the good days? The happy music, of course. G'day, mate. Shall I throw a... Wow, I'm choking on my own coffee. Shall I throw a pip on the bobby for you? Ripper. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let me emphasize that the government wants to make sure your feeble, pea-sized brain, this is their point of view, of course. Past performance does not predict future results, and Forex is risky. Trading is risky. This may not be appropriate for you. I need to get that across. I don't like to treat you like a child, but I'm required to. Hey, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. I'd like to treat you as an adult, someone that is capable of making important decisions for themselves. Yeah. I do these sessions 7:30 in the morning, Monday through Thursday here at forex.today. Thank you, forex.today. First Friday of the month, I'm at FX Street doing non-farm payrolls live. Does everybody understand that trading's risky? Does everybody understand you're not going to be guaranteed to make money? You might actually lose some money. Yeah, Nick's like, driving to Atlanta's risky. Risky? Foolish. So anyways, I'm here to be a guide, lead our charge here in the market. New York's going to open soon. This is about London lunch. It's a good time to trade. So I'm here to go over the charts with you, talk technicals, talk fundamentals, talk trader psychology, and be here to answer your questions. So I'm in one of those weird moods where I'm wide awake, having fun, and at the same time I'm tired. But that's how it goes, huh? All right, I was given feedback that sometimes it's difficult to see the currency pair that I'm trading, right? So MT4 displays it here, MT4 displays it here, MT4 displays it down in here, but still with resolution differences and stuff. So I have put on many, if not most, of my charts a watermark. Thank you for the feedback. right? Thank you for the feedback. And I'll add more. Yeah. Now, who was it that sent it to me? I've forgotten. Yeah, Joe, it didn't work though. The one you sent me didn't work. Just didn't work. What can I say? So I just found another one. But thank you for the feedback, anyways. And, no, for you, man, for you. This is for Joe. So thank you, Joe. Where do I get that dang watermark? I got mine on the internet. No, like, look. So I went here. Oops. I went here. You go to market. Market. And I typed in watermark. There it is. Not too complicated. Nice, right? So this is what when you click on market, right? You just get a list of crap, and then you do a search for watermark, and I did the free one. This one here, the nicest. Neat, right? Yeah. Cool. I don't really like these period markers, but sometimes they're helpful. All right, so there you go. Pig dog 1 hour. If you switch it to 4 hour, now it's Pig Dog 4 hour. Now I used to have one, and then it just stopped working. So anyway, so we're back. Okay. All right, so here's what I'm looking at right now. You see the thought process here, guys? If I was a bear, I'd need to be hot to go HOTTOGO. What? Ryan's watching the same area. I guess the whole point is everybody's watching the same area, except amateurs, right? Now, how long ago was it that you didn't see things like this? That's the scary part, right? Yeah, not that long ago. Yeah, it's just amazing, isn't it? So you might as well remind yourself that it may have a propensity to fall. What do you think? To say, and while it's doing this, right? While it's doing this, you may want to consider being bearish, is kind of what I'm suggesting. Right? And those downward sloping lines would remind me that I want to think that way. Now, going out to a higher time frame, maybe you are a buyer. That's cool too. All right, we can do it that way. Okay. The thing is, if you are a bull and you're thinking about buying it now because of the bounce, you're just not a very good trader. A disgrace to the bullish community. Where were you down here, right? Where were you 6 hours ago, kind of thing, right? So a bear should be up here, a bull should be down there. That's that. Come on, I'm struggling up. Okay. So since your primarily a leading indicator. That's what your brain is doing. You should always leave yourself notes for the future, little mementos. Okay. Neato, right? I can see clearly now the rain is gone. Just very interesting to like be up at these elevated areas and say to yourself, hey, maybe it could fall up in here, huh? Lower, low, lower, high. We know there's pivots and stuff up there as well. Right. So we're just looking at price action there. The pivots are another leading indicator that make things very interesting. You may not be watching the pound kiwi. It's all right. Not a perfect pivot here. Maybe you can do a cluster. These. Are these pivots? Oh, they are. Okay. What do I want to do? Oh, yeah. Cool. Template. Save template. I am going to name it FX Weekend Pivot Clusters. Boom. Replace it. Ka-chow! There we go. So anyways, this is a very interesting move, isn't it? They're not supposed to be down there, but you have choices to make, and they're not easy ones. M3, you need to be prepared to sell now, going for M1. If you're a bear, okay, if you're a bear, you should be looking at it this way. You trace up into this pivot cluster, drop it like it's hot, off the 78. Okay. If you're a bull, however, you buy zone, has sort of come and gone. You might have been waiting for a little bit lower of a cluster, but these guys want to take it north. So remember, the difficulty is choosing what team you want to be on. The rest should be easy. I can see clearly now that Wayne is gone. Neato, right? Now, in this case, you also want to look for a congruency. That's another reason to look at your charts the way that I'm looking. You notice how they're all pairs, all pound pairs. See how I have down here in the profile, it's scan pound. So wouldn't you want to see congruency? In this case, not the numerator is constant, and the denominator is the variable, which means in this case, if the pound is bullish, all of these should be going up. If the pound is bearish, all of these should be falling. Ryan, it's just standard out of the box. I think it was 0.35. Yeah, I'll show you. I'll pick, here's how to install it. You can see these are dead templates. Here, you ready? You drag it, you hit OK, done. Of course, I don't like these grids. I don't know where these dead templates came from, but remarkable that last week the Swissy yen stopped at its bearish target. What a coincidence, right? You probably don't even watch Swissy yen. But what an amazing coincidence, huh? That the pivots work on something that probably has very low trading volume. And the top is the weekly central. It's just an amazing coincidence, huh? I mean, just for fun, let's find something like that we never, ever trade. Euro Noki, Euro Seek, USD KK. All right, let's see how this trades. Let's see, Denmark, huh? Pivot, pivot, pivot to pivot, pivot to pivot. It's amazing, isn't it? Pivot to pivot. Monthly target, full on reversal. So both weekly and monthly pivots, even if you don't trade Denmark, amazing, huh? Look, right? Crazy. R1 is the top, S1 is the bottom, M3 to M1. Look at this. M3 went like a couple of pips above, and the bottom is exactly M1. Just ridiculous. This sucks because it's so oversold that you can't even really catch it. But compared to this big drop and this big drop, nothing really happened. Hit the monthly target. This dark green one is the monthly projected bottom. Full on reversal. Yeah, not here, not here, not here. Full on reversal here. At the projected bottom. Just amazing. Well, what I'm trying to suggest, Nick, is that you should always trade with these rules. It has nothing to do with Denmark. And maybe it's, you know, maybe there's just enough automated tools that are using these pivots. You know what I mean? That even pairs that people don't really watch. I mean, imagine my war room, and each screen was dedicated to one chart, like USD DK on a, let's say, a 1 hour chart, and every currency pair. I have dozens and dozens of these things, all set up with weekly, monthly pivot points, some basic rules programmed in, and it's just trading everything. Yeah. Now, I think it's not the right thing to do. Okay, because remember, it makes sense, and it's so much easier once you've made the decision based on, you know, non-technical factors. Yeah. Sunday/Monday is the last of the live swing trading lessons for the swing trading group, which is amazing, right? It's been 5 weeks, 6 weeks. Cool. All there, all relevant, all important. So going back to pig, okay, what you want to look for is congruency. Otherwise, another name for it is currency correlation. Okay. Now, if 3 of them are going up and 1 of these is coming down, it would tell you that the pound is strong. But whatever's going down has a currency pair, or sorry, a currency even stronger than the pound, even though the pound versus most things is relatively strong. Something is even stronger. So you can walk away with 2 things, buy the pound, but buy the other thing too. So like, let's say pound dollar is going up, pound kiwi is going up, pound Swiss is going up, but pound yen is heading down. But buy the pound, let's say like buy, well, I guess in this case it'd be like sell euro pound, but sell euro yen too. Okay. Okay. What's the direction of the trend over the last couple of months? Well, since February. Down. So that's your sell zone, right? That's your sell zone. That's your sell zone. That's your sell zone. And that's the tricky part, right? Because this was the first weekly trading setup that the swing trading team and I had. We had this as a sell zone, and then boom, just like. But I think it even overlapped the monthly one. But anyways, it was just over too fast. Monthly sell zone, or sorry, weekly sell zone, sell zone. No, not all perfect, but catchable, tradable, right? Here's another great one. One chance, second chance. Pretty amazing. Look at that reversal, just redonkulous. Wow, look at that. Projected low to the projected high over 2 weeks. Wow. Funny thing is, you may recognize this close right here as a counter trend setup. So it gapped out and reversed as it was supposed to. Not an easy one to trade, but still followed the rules. You see anything else going on there with the beast? Right? Counter trend trade, almost a counter trend trade, counter trend trade, counter trend trade. Little opportunities for scalping. Oh, here's one. Little opportunity for scalping. If you like those types of things. Ed, pound versus Swissy. S1 being the top, bottom. R1 would likely be the top. Can you see that? Guess I really should carry this all the way, huh? Yes, I'd be careful here. If you're a bull, You could have bought it at the support pivot. You could have bought it at the central pivot, but you can't buy it now. If you're a bear, this whole thing's very disappointing. And forex can be that way, right? You're like, I sold it, yay! Oh, yay! Oh, I'm the greatest trader in the world. Oh man, yes! Oh man, been there, done that. Yes, can you trade the indices using the pivots? And yeah, why wouldn't you? Where did the pivot points come from? Formulas. No. Where the formulas come from? Yeah, commodities traders. Yeah. I did a presentation maybe 8 or 9 years ago called Trade Anything, Trade Everything. I was going to do a book about it, you know, do a follow-up and all that kind of stuff, but I got too old. How to Trade Anything, How to Trade Everything by Wayne McDonald. What is this? This was supposed to be yens, and for some reason, none of these are yen pairs. All right, well, I guess we have to analyze this since we're looking at it. Some idiot sold a role reversal. A monkey head. What a ninkal poop. An orangutan. My daughter in the last years got to spend the night in the Georgia aquarium, sleeping inside one of those curved domes that people walk under, and you know, like the stingrays and the sharks swim right over top of you. Yeah, she got to like spend the night in one of the. I'm like, I am so jealous. And recently, she spent the night at the zoo, and I said, "Did you see the orangutans?" Dad, they're orangutan. I'm like, what? Orangutan. It's 2 words. It means jungle man. Like, you didn't just correct your father, did you? I know everything. I'm invincible. Yeah. Orangutan. Well, there you go. I said, yeah, well, I ate one of those in South Africa. It was great. Yeah, you can eat anything you want in South Africa. Well, Daniel, when you eat one, it's not orangutan. It's Hutan à l'orange. All right, so back to this. How dare you enjoy what you do for a living? All right, so anyways. Oh, that's right, because that's dead. All right, no wonder that wasn't working. All right, Swissy. I don't know. I wonder, I wonder what's going on here, huh? Amazing coincidence. USD Swiss franc heads down to the weekly and monthly support target. Weekly and monthly bearish target. Flips and reverses in counter trend trade fashion. Now, in the counter trend scenario, your target's the central pivot. It's pretty amazing we hit the central pivot in 4 candles, and then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. It took 25 candles to get higher. You get there in 4, it takes 25 to get through. And then, of course, stops at the R. Just amazing coincidence, these things, huh? So it comes down to how do you want to play it now? How do you want to play it now, I suppose, is another way of saying it. That seems not good enough. Maybe that. This says it's ready. This says it's ready. Boy, you better want it, is all I'm trying to say. Yeah, you could buy it off of here. It's not amazing. It's not the greatest opportunity I've ever seen. But yeah, if you want it, you probably wouldn't even get that kind of pullback. But that's the idea here anyways. Oops. It's not much of a pullback, but you do have this acting as support. And it seems like somebody's hell bent on buying it or driving it to parity. But I'd have to think that this right here is a huge sell. Doesn't it look like a huge sell to you? I'll leave a little momentum. Right at the psych level. Yeah, I don't want to buy it if there's only 40 pips on it. There must be something better, right? There has to be something better than that. You know what I mean? So you have to keep an eye on it. Maybe you scalp your way north. I mean, there's always a way to do it. You scalp your way north, you know, ready to get out at any moment, right? And then when you get up high, you might want to look for reversal patterns and such, right? Yuck. Nick, really? Oh, Nick. You said it, so you're open. You're open. So you made yourself vulnerable, so here it comes. So you did something like that? No, I bought it near the bottom, and right, but then you said, and put another buy order above the weekly. Hmm. Hmm. And Nick's like, I have to go now. I have to go to work now. All right, all right, all right, all right. Look. If you do stuff like this, you're buying high, and by definition, you're breaking one of the commandments, right? There, most people don't know this, but it was discovered by the Discovery Channel, I think in the Dead Sea Scrolls, that there was 3 tablets that came down from the mountain, not 2. There's another set of rules. Yeah. Don't sleep with your neighbor's wife. We get it. Don't kill anybody. Yeah. But the serious rules are like never buy high, right? Right. Like just rules you can't break. Never use your own supply. Just, people know these things. Uh, okay. So anyways, well then let me at least comment. If you're going to trade a breakout, what I prefer you to do is buy it at the exact same price, but buy it after the breakout and after it retraces, and then buy it, kind of like that, if you're going to do it. But that, because I thought that's what you were saying, that it was going to break out and you had an order up there. That's how a lot of traders trade, but it's not proper. Even if they make money, what happens is if you buy it that way, your stop has to be down here. So now you're risking all of this. And you're really just starting to pierce through resistance. So any sort of fake out will cost you dearly. And probably on the long run will wipe out almost all the profits on that trading strategy anyways. But if you let it break out, pull back and buy to support, now your stop could be like here. So you risk, let's say 33% of the money plus, right? Plus you're sort of getting a more reliable pattern. So you're taking less risk and you have more potential reward, if that makes sense. But okay, so yeah. Cool. Yeah, so I misunderstood, Nick. That's all. But you gave me an opportunity to make a lesson. Right. So yeah, you got to buy low, buy low, buy low. Now what I'm saying here is I think the upside potential. So where are we now? In the 60s, right? Okay, 60. Let's just call it 60. But if you pulled the trigger now, 63, right? So let's just say 65. And the upside potential is all the way to 1. So if you're lucky and you go through resistance and then you get to the next level of resistance, you walk away with 35 pips. Oh, I don't know about you, but I'm worth more than that. I'm not that desperate to take the shot because I think my stop would probably have to be farther, right? So they're just better trades, that's all. So, but if you could scalp it up there, it's funny, if you had the volatility behind it, you could probably do 3 or 4 trades in there and walk away with 40 or 50 pips, risking smaller amounts per trade, right? Because sometimes when I'm skip scalping, I'll do like, let's say 15 OCO, and if I lose the 15, I stop scalping. because I'm like, well, I don't want to risk 40 or 50 pips on this because because that's where my stop would need to be on the downside. But I do see it probably will go up 35 to 40 pips. So it probably will go up, and then it will probably come back down. Don't want to risk the 50, but I'll risk 15. So you scalp up, do 15, 15 OCO, hit the profit, have it come back down, take another one, knowing that you're already up 15, so you can actually take two because you said you would risk the 15. But you're up 15 plus the 15 you're willing to risk, so now you got two more scalps. Boom, hit the second one. Now you're up 30 pips, but you've never risked more than the original 15. You see what I mean? And the more you win, the more you can afford to keep trading. You earn the right to keep trading. So then finally you get all the way up, maybe you've made 3 trades, you got 45 pips, right? Plus the 15, so now you can risk 60 if you want it, right? And then you get up to the other area, which I guess on this one, what just happened? What just happened? How did we get on USD yen? That's strange. Okay, and then you find yourself up here at this pivot cluster. So then you start looking for opportunities to sell back down. And so you make 40, 45 on the way up, and you make another 40 or 45 on the way down. And for the original trader here that was risking a whole bunch, maybe they were up and then they were kind of back down, and then they get knocked out. So they can walk away with 20. You can make 45 up and 45 down. And someone else says, well, nothing really happened today. And you're like, yeah, you're totally right. But I made 90 pips, right? And you never risk more than 15 because you just keep racking it up. And when you do stuff like that and you make that commitment, your first 2 or 3 trades have to be awesome, stellar setups, right? Because if you blow it on your first one, you're done. No more scalping. You didn't earn the right. But if you can get a couple in there, that means now you can make 3 more trades, right? The two winners you could risk because it's free money. It's money you didn't have before you were scalping, plus the 15 you're willing to risk to have the opportunity, right? And so now you're in business. And you can be a little more loosey-goosey on the entry, but as long as you're trading in the trend and using leading indicators, you'll probably do all right. Unless the market changes and reverses, and you can just stop trading and say, well, got lucky there, at least I'm still up 30 pips. Do I scale into trades? There's a sort of a yes and a no to that. So the general answer is no. I don't scale in and I don't scale out. If we had a running joke, 10 years ago, maybe 8 years ago, there was a running joke. I said scaling's for fishermen, right? If you look at your charts and you say, wow, I should get out, then get out. Why would you scale up? Well, take half of your profit and let the other half. Why? That just sounds like you don't know what you're doing. Why would you take half your profit and let the other run? Why would you get out? And inevitably someone will say, oh, because I made 100 pips. The market doesn't give 2 craps about your 100 pips. Nobody sees your 100 pips. Why would you get out because you had 100 pips? Why is 100 pips relevant to anybody or anything? You should get out because you've hit your target or you're at support or resistance or whatever, but I don't care about the number of pips. And then if you're at hardcore support or resistance, why would you only get out half of your profit? You're like, dude, you're at solid support. You sold it. You're up over 100 pips. I don't care that you're up 100 pips, but you made a reasonable profit, and now you're at the obvious support. Oh, I don't know. I think I'll take half of my profit and throw the other half away because maybe it'll fall farther. That just sounds stupid to me. What do you mean maybe? When you say maybe, it sounds like you don't know what you're doing. You know what I mean? Well, maybe it'll fall farther. What? Are you stupid or something? Just take your profit. What do you care? You trying to like win an award, have the biggest trade ever? No, just make money and move on to another trade, right? So I don't scale in, I don't scale up. Now there's a caveat for that. Because you could consider it scaling in if you saw me, like building a portfolio. You might consider that one giant trade. I don't, but you could. I mean, just I guess by definition they'd be the same. That'd be a basket of trades, right? But the difference is, I say that I'll make something up. I'm a bull on the pound. I think it's oversold. Brexit's too much. The media's made too much out of Brexit. And anything's better than working with the French. So great, right? So the UK is out. Great. That might be my point of view. So I would want to slowly buy pound versus everything. In fact, I would start with things that are most weak, right? So let's say I want to be long pound Swissy. That could be my point of view. Well, I might build 20 or 30 pound Swissy trades all long because I'm bullish on the pound, and I might be bearish on the Swiss franc because that's good for Switzerland, the negative interest rates and all that kind of stuff. So you might say, well, Wayne, you scaled in to a position. And I'll say, not really. That's not, no. I guess you could look at it that way. But I just look at it as building a portfolio of positions that each individually has a different risk profile. Because some might be up 300 pips and some might be down 100 pips because they're newer trades. Most will have stops at break even plus, floating profit. So you could say you scaled into that, and I say, well, not really. Okay, but I don't think you mean, building 100 pound trades, 25 pound Swissy longs, 25 pound yen longs, for example, right? Pound Kiwi, whatever. And that is, by the way, how you're going to make the vast majority of your money. I did a video several years ago, I can't remember, but and I called it How to Get Filthy Stinking Rich Trading Forex. And it's, as you probably have discovered, it's not the way that most people are taught how to trade currencies. The things that you're doing today, for example, are not going to make you filthy stinking rich. Now, it can be done, but that's not how you do it. Trading a 5-minute chart, a 15-minute chart, a 1-hour chart, 4-hour chart, that puts you into trades. You're making 50 pips here, 100 pips there. But, I consider all of them income trades. They're not wealth. It's just income. Okay? So, great. How much money did you make? How many pips did you make today? Did you make 100 pips? Great. Was it a lot of money? No, probably not. Just probably wasn't. And then relative to your account size, it shouldn't be, right? So the way you do get filthy stinking rich is, first of all, you have to do your analysis, long-term analysis of the technical charts. But that just helps you with the timing of things, measuring the conditions for your positions. But your strategy should be based on fundamentals, things like macroeconomics, central banking policy, all that kind of stuff. And you've made a decision, like I tell you every day, make a decision. I'm bullish on the British pound, and let me give you 5 reasons why. And, if you invest your money into me, sir, I will, day and night buy British pound. I mean, whatever. If that's your opinion, and you backed it up with facts, right? Then you have an opinion. It's something that is investable. Because a professional that trades other people's money needs to convince people with money that they should invest into you, and they make the decision partly because they like you, but also because you have a coherent strategy and opinion and point of view. Those that don't have coherent opinions and points of view will simply stay poor. Right? You could trade currencies during the day and deliver pizzas at night. It'll be right. So the way you do it is you make these opinions and then you actually trade them, and you trade portfolios, not just picking up 5 pips here, 25 pips there, 30 pips. Eventually what you want to do is have a portfolio that reflects your strategy, your opinion, if you will, and have 100-pound trades where you're long the British pound on 100 trades of reasonable size that you've done one after another, trading in the direction of the trend, right? Not 30 or 40 losing trades. No, you have 100 winning trades, all open, all going in the direction of the trend, all going in the direction of your bias, running through the seasonality of the year, right? And in the course of maybe 3 or 4 months, you make 50 or 60 or 70,000 pips. Thank you for the heads up in the news. That's how you do it. Has anyone had 25,000 pips in floating profit? At one time, you're looking at your account and it says equity, and you're looking at it and and it's 25,000 pips. Yeah, well, you should. Yeah, not yet, but right, but that's what you need to do. This is the wrong time of year. Okay, this is the wrong time of year to do that. But later in the year, you absolutely should. Canadian industrial production weak. Jobless claims 258, high. That's not good. GDP 2.1, good. Yeah, pretty good. GDP, bro. Good deal, bro. That should be bullish on oil. That's a problem, isn't it? Good deal, bro. Time to sell it, bro. It's $50, bro. How amazing. So, Canadian industrial production looks like a miss. Oh, raw material price up. Still, it's not that great. Jobless claims is pretty bad, but GDP was good. Consumption data is better than expected. Quarter over quarter, better than expected. PCE, better than expected. It seemed like a pretty good, a fair amount of good news for the USD. But very little reaction. Yeah. Cyborg says, so long-term is key. Yes, a little more than that. But yes. But you should do some basic numbers. And I'm surprised out of the thousands and thousands of people I've coached, like 3 have done some basic calculations. Like, just figure it out. You're averaging 30 pips a day, maybe 20. Right? Right? So you're like, maybe that's 100 pips a week, but I bet you're not doing that either. But let's say you're doing 20 pips a day, 100 pips a week, you're You're averaging 400 pips a month. So one mini lot is $400. One standard lot's $4,000. Like you're going to have to just, I mean, just the amount of leverage you're going to need to make any reasonable amount of money is just ridiculous. Because, you know, right? I mean, so whatever. You need to make more pips. You understand? There's two ways of doing it. You need to make way more pips, like way more, not 400, 4,000, not every month, right? But you need to get in your brain that if you're not even doing 400 pips a month, which is 20 pips a day, then you really need to make some changes, right? You need to make more pips, or you're going to need more assets under management. Because look, if you did 400 pips a month, but you could do it every month, you showed me 3 years where every single month you did 400 pips or better, not much better. 400 pips is like the bare minimum. You can do it 20 pips a day. You got rock solid for that. Oh yeah, you got it. You got it, man. You will be able to raise money, but it's the 3 years and the consistency. That'll do it. Fine. But at least someone will say, well, I can, if I give this guy money, I can bank on the 400 pips. Great. Okay. You'll raise money. The other way of doing it is you need to have a lot more money because you're going to need to have a very large account size to justify a lot size that produces a reasonable amount of income. So if you were trying to make, let's say, $10,000 a month, right? I mean, your leverage would have to be so jacked up that you're just not likely to do it, right? Because just imagine you're trying to make $10,000 a month and you only have $100,000 in your account. But now you're looking at 10% per month, right? Like, but I'm telling you, that's way too high. So your lot size is appropriate for someone that had $350,000 in their account. You see what I mean? But I don't think you have 35,000 in your account, yet alone 350,000, right? So you see what I mean? So then you need to make a lot more pips, or like I said, just get the 350,000 and keep doing what you're doing. But you know, so that's, if you reverse engineer everything, you say, all right, well, maybe you don't have the 350,000. Maybe there's no way you can get the 350,000. That's great. Then focus for the next 3 years of producing the pips with low risk, low volatility, and do it consistently. And money will just rain out of the sky. Don't worry about that. Peter, the standard operating procedure for hedge funds is a 20-20. Sorry, a 220. A 220 is a 2% management fee and a 20% performance fee. But there are many different ways to do that. So anyways, we're planning on covering a lot of these things in South Africa in November, if I do that event for those that want to become hedge fund managers. So Henley, I'm reviewing the document. I'm sorry, I just have a lot going on. I'll give you an example. On top of all my normal work and on top of all my school and all that kind of stuff, my daughter's fish died, then my son's fish died, and then this morning my our guinea pig is dead. I know it sounds like an amazing coincidence. But yeah, the guinea pig died too. She was very, very old. In fact, I held her yesterday afternoon because I knew it was coming. I took her outside in the warm sun and she ate the grass. And it was great. And then in the evening, I sat out on the back deck with her in my arms for, I'm telling you, 45 minutes. I even fell asleep with her in my arms. The family woke me up, come on in, put her back, and then she died in the middle of the night. Yeah, so I've been doing funerals. We got, we got a graveyard and our garden, and yeah, it's so yeah, we all live complex lives, right? Yeah, we had that guinea pig for 6 years. Well, no, 5 years. 5 years. 5 years. They should have a sign at the pet store, right? Gerbils, 1 year. Hamster, 2 years, right? These are commitments. Guinea pig, 5 years, right? Parrot, 80. Like, who would buy a parrot? Like, I mean, there's so many rules in the finance industry, right? There should be rules for the pet store. Like, sir, you're 40 and you're buying a parrot. You understand that when you die, it'll have another 40 years to live without you? Like, we need to know who's going to inherit this bird, and is it your children? Okay, great. Have they taken a class on raising birds? Are they good? Like, I don't know. Yeah, no, yeah, Kareem, you're right. Yeah, I'm funny about a lot of those things too. South African interest rate decision coming up. Whoop, whoop. You guys excited about that? We are just, was it 20 minutes? Yeah, 20 minutes away from South Africa just blowing the world away with their central banking policy. What do you think? They're going to jack it up? 7.25, 7.5? Yeah. So this trade's just moving on.com. So do you think it's going to make a lower low here? Are we on our way to 107? Okay. In that case, what you want to do is drag this across. It's just price action stuff, right? So, going back, if I have to backfill all this stuff for you, let's do it. I'll backfill this one. Okay. And when I do stuff like this, I'm reminding myself here that I want it to come back up here and sell it. And then you look at the pivots and then you adjust, right? But the lower low, as soon as you make the lower low, you mark this support as resistance to say you don't want to sell down here, you want to sell high. Then you look at psych levels, then you look at pivot points, and you can see that ended up being the pivot point, but still it's valid to me, right? Then you make a new lower low, right? You can use support or resistance. You can see in this case, It's this support and that resistance came across. Great. Obviously, somebody sold it, made a new lower low, take the old support, which you can actually drag all the way across, right? You can see you don't have to be incredibly accurate. Okay. So it made a new lower low, mark up here. On the roll reversal, what used to be support is now resistance. Sell it. Okay. And now I'm sort of doing the same. It's not a confirmed breakout yet. That's a judgment call, but let's say it heads all the way down into here. Okay. Then what you could look for is retracement. All right. And then another move. But I'll tell you what, if I'm down here, I'll probably just take the profit and run and not wait for a second or third chance. Okay. Cool beans, right? Okay, Anthony, but Anthony wants peso. It's a bit early, but sure. I mean, it depends. So I did yesterday, I think it was yesterday, we identified this move and then I identified this blue area as a channel, right? You see that? Going back all the way back to here, right? So I said if you're using this channel, then that's a sell zone. Was that yesterday? Anybody remember? I said it was a bit early, but yeah, so use the channel. All right, so yeah, pretty lucky. Seems like it may have worked. You can do things like I just did, you know, that's sort of your sell zone as well. You can use a fib for this, right? So you can see it was a perfect 618. And there's all kinds of ways to skin this rabbit. But the most important part is you're a bear. If you know you're a bear, then the rest is fairly easy, right? Right? So you'll see, I already have this area here highlighted, which is a pivot area. But if I'm doing price action, I'm doing it like this, which is all about the same, right? Only the names will change. Now I'm worried that this didn't extend down. Okay. So tomorrow is the day. What happens tomorrow? The faces are so cold. You know, I trade all night just to get back home. End of the month. Tomorrow's the end of the month. Paycheck. So what happens if you get a paycheck, but you don't have a bank account? How do you handle that? You go to Western Union, you cash the check, right? And you send money home to mom and dad or to your wife and kids, whatever the case may be. You send some money home to Mexico. If you happen to be Mexican, because you're like, if you're Jamaican, you're like, I don't get it. Why am I sending money to Mexico? Like, oh, no, dude, you're in the wrong line. Right? Yeah, but if you happen to be from Mexico, you may, on payday, send some money home. So that could be Friday, and Fridays are sort of like super awesome days for this, but it could be Monday as well, depending on whether you get paid on the 1st or the 31st. There's nothing like a Friday payday, huh? You go straight to the bars, right? So anyways, you go to Western Union, you cash it, but you send some money home to mom and dad, to grandma, grandpa, wife and kids, whatever the case may be. And that's a currency trade because you're paid in US dollars and then you convert it to Mexican peso. So you're selling dollars and buying peso, right? Supply of dollars goes up, demand for peso goes up. So therefore, the value of the peso increases, the value of the US dollar decreases. Okay? And how much money is going to go into the market between Friday? You can't count the weekend because the banks are closed. If you look at Friday and Monday, what's the size of the currency trade? How much are we talking about? $2.35 billion. The last I looked. Actually, I haven't looked in a while. It's probably 2.4 billion. But if you said, Stefan wins closest without going over. So you could start front running a trade like that, front running a $2.4 billion trade. I mean, we could ask Google. We can ask Google February Mexican remittance. Let's see. Mexican remittances up to this year. Cool. Da, 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 da. Ooh. Ooh, it dropped in January. What? So let's go back, let's say October of 2016, 2.2 billion. November, 2.36 billion. December, 2.33 billion. So all about what I was saying. And then January, just slightly over 2 billion. Like down $300 million. What? Mama's going to be pissed, right? No love sent home in January. What? I guess they spent all their money at Christmas time, huh? Yeah, saving for the wall. Yeah. So anyways, I don't have newer data than that. I apologize. That's all I got. Okay. So when I first started trading this, it was about 2.5 billion. Okay. And then the financial crisis hit. Do you think that had an impact? It dropped by over $1 billion a month. Holy smokes, eh? Huh? You think that was important? That's bad for pacing. Up is bad. Let's just clear this out. Let's just do this clean. Amazing, huh? Look at the recovery. Okay. Amazing, right? And by the way, plan for the end of the month? Oh, I don't know. First of all, we're out of time, but yeah, I'm not even sure what you're asking, so maybe we'll cover that next time. But the central bank, Governor Carstens, if you don't know your central bankers, guys. Anyways, Carstens has been talking up the Mexican peso. So anyways, another 2.3 billion sometime soon. Yeah, pay attention, right? So anyways, I've gone way too long. I got to get ready for the South African interest rate announcement. We got a lot of riding on that right now. It's huge stuff. There's some big apples. So anyways, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Cheers.